Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Lately, I've been getting more comments on the risks associated with Tesla in China. I mean, it's obviously no surprise, and we can all realize why, but I'd like to explain to you how I view China for Tesla. It might not be the business you think. I've said before that I kind of separate the Chinese operations somewhat from the rest of the business, because it does have a different business model. It's just a great cash cow generator and serves a great base to carry Tesla through more difficult times. What with a diversified cathode approach and multiple manufacturing locations, Tesla managed to own the Chinese factories themselves with no local Chinese company as a joint venture. This was the first time the CCP had allowed this, but was a strong caveat for Elon in the deal. China also realizes how much they'll benefit from the kind of human capital and innovation having a company like Tesla in China will create. But Elon's no fool. He's not going in with his eyes closed. I don't think Tesla even had to invest any money into the initial development. I think China lent them the capital required. Tesla just had to spend time setting it all up. However, there's also a lot of great, hard-working, talented manufacturing labour in China, so much so that even Tesla can learn from and improve their next factory through more experience and knowledge. I think Tesla repaid the loan fairly quickly, likely with proceeds from the Shanghai car sales. Therefore, Tesla China has already paid for itself, and is now just acting as a great cash flow generator, further supplemented by Fremont too. These two factories serve as an excellent base in order to help Tesla to grow to as big as needed. But Tesla are battery constrained, so why set up in China, selling lower cost vehicles, when there's still so much demand in the US for people wanting to spend over $60,000 on a Model Y? Yes, opportunity cost. But the thing is, in this instance, there isn't really any opportunity cost. This is a win-win partnership between China and Tesla, or more so CATL and Tesla. CATL is the world's largest battery manufacturer. China is likely proud of that fact and want to maintain and build on that position. However, CATL cells are not overly energy dense and thus reduce range. But it would seem the Chinese market is more accepting of lower range vehicles. They also spend less on average on vehicles. Therefore, Tesla has a lower range Model Y for this market that is not sold in the US or Europe. But Tesla have these LFP batteries that they need to judge the best, most profitable solution for, which it would appear would be a rear-wheel drive standard range Model Y. These cells are also manufactured in the Model 3 rear-wheel drive in the US. Due to the Model 3 being lighter than the Model Y, it was able to generate an acceptable range for the overseas market, but also sold at a higher price tag in that market compared to China, so the margin being much higher. It also meant that this would free up more 2170 cells for other vehicles, as they're no longer being used in the standard Model 3. Alright, it all sounds good so far, but China has been known to nationalize companies and steal all their intellectual property. In fact, they just nationalized the auto performance company Saleen, stealing all their patents and intellectual property to the estimated tune of $800 million. Not only that, I believe the director of corporate affairs of the company has been missing since June. But if they nationalize Tesla, which in theory shouldn't happen due to Tesla owning their operations outright, then I'm guessing that none of the Teslas produced there could be made to work without Tesla saying so. That would be if they could get the lines operational in the first place. Therefore, no point in nationalizing Tesla. That's just a guess, but I'm guessing that Elon is always several moves ahead. Therefore, Giga Shanghai is of most value to China when Tesla can control their own factory. In fact, it goes further though, as CATL may be the world's largest battery manufacturer and growing. Well, that was dependent on one thing, or one company, Tesla. If Tesla lost its presence in China, then CATL would be producing far too many LFP cells, far more than any other EV OEMs could handle. Sure, they could go into energy storage, but I don't think there are many other companies as equipped as Tesla to take on hundreds of gigawatt hours of batteries. Therefore, China needs Tesla. China does also want to expand their local EV market too. And with CATL expanding, it will mean there are more cells available to the local OEMs, along with further advances in battery efficiencies, and reduced costs through economies of scale. So it's in China's advantage to use Tesla to improve their economies of scale with EV and battery sales, along with all other benefits a company like Tesla will provide to China. Tesla is like a machine that turns CATL cells into a finished product, and Tesla take a huge margin for doing so. How long this relationship will last is anyone's guess, but future expansion there is low cost and fast, with a very high return on capital. But obviously people are feeling less confident about Chinese operations. Anyway, when you factor in all these reasons, I absolutely think there is no possible way that Tesla will ever manufacture the 4680 cell there. It might just be too much intellectual property worth risking. Those cells are worth tens of trillions of dollars. Tesla's most important product isn't the Model Y or Robotaxi, it's the 4680 cell. The fact that Tesla hardly even sells vehicles with their own cell It's just a further illustration of how early on we still are. It would be kind of like if Henry Ford outsourced someone to make his engine for the Model T. That's the stage we are at. Not that Ford ever did that, because he knew how important the engine was, but it's the same for EVs. The battery is the equivalent of importance, and where the most R&D must be concentrated in order to improve efficiencies for EVs. However, that's not to say that Tesla may want to use some of CATL's intellectual property. CATL are currently constructing a brand new fab pretty much next door to Tesla's Shanghai factory. This is likely going to be another cell factory, but it also sounds like it might be some sort of research facility too. My theory being that perhaps Tesla and CATL will partner together in order to make the ideal LFP cell. The outcome might be that CATL have the rights to produce the cell in China and Tesla the rest of the world. Possibly, although I would also hope that Tesla have some pretty incredible LFP cells in their labs already and are getting close to the ideal form factor. I can't wait for Elon to announce another battery day where he presents Tesla's LFP cells. 4680 cells were the necessary cells to take Tesla to the multi-trillion-dollar valuation. These LFP cells will take it to the tens of trillions. In fact, I'm hoping to see some revolutionary new LFP cells from the Korean and Japanese battery manufacturers too. I'm surprised how little we are hearing about LFP cells from outside of China, to be honest. Perhaps Legacy have gone all in on nickel cells and aren't interested in LFP due to the lower range, and their customers require more range. I actually have a theory that when families start adopting to EVs, that they'll have a long-range EV and an LFP EV. LFP cars can still have enough range for perhaps a whole week's driving. It's not even like you have to keep the car constantly charged. In fact, with the building infrastructure and decreasing charging times, range really is becoming less of an issue. Likely why Tesla are only offering 280 miles on their new 4680 Model Y, because the extra range really won't be necessary in just a couple of years' time. But if each family had an LFP vehicle for regular day-to-day driving, and also a long-range EV for when road trips are necessary, then that should be the best of both worlds. It is also, in fact, exactly what I have. My wife has an LFP Model 3, and I have the performance. Alright, setting up businesses in nations with communist regimes is obviously not without risks. Elon and Tesla seem to have a good partnership with China though. Tesla will likely be too hard for China to run if nationalised, and the intellectual properties may not be so easy to take. CATL is also dependent on Tesla consuming everything they can make in order to grow. This is Elon doing a deal, so we'd hope that he has considered every conceivable angle already and has many contingencies for any issues. Right now, China is a great cash cow and a large part of Tesla's earnings, but as the new factories grow, then China will become less important to Tesla. Elon said that China will only be about 25% of the market, not the make or break, but still a good chunk of customers. Of course, like always, any business model or a forecast on auto sales is totally moot when you factor in robotaxis. So even if Tesla lost 25% of their car sales market, well, it may only look like a couple of percent when compared to robotaxi income. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.